It is time now for today's strategy session. Wells Fargo's Investment Institute releasing its 2025 mid-year outlook with insight and guidance for investors. Joining me now, we've got Veronica Willis, Wells Fargo Investment Institute Global Investment Strategist. Veronica, great to see you. Thanks so much for hopping on after the opening bell. Walk us through some of the key takeaways from that report.
Yeah, absolutely. One major key takeaway in our outlook is that through 2026, we're expecting stock market to move higher. There's going to be some volatility this year. There are a lot of economic, geopolitical, and policy uncertainties that are going to contribute to some market volatility this year. When we think through 2026, as the economy growth reaccelerates, we are going to see those higher stock prices. And so we're really focused on keeping investors invested in the market at this point.
And so with that in mind, one of the notes that I was looking at is your views and how you're evaluating this entire outlook across periods of volatility that are being expected here. You mentioned within this outlook, viewing further periods of volatility as an opportunity to lean into equities to position for the gains that you expect through 2026. What does that mean in terms of an asset class that you would be looking to and kind of over-indexing towards?
That's right. So we want to be selective in that equity space, and we're focusing on quality. So we like the large cap and the mid cap space over small caps, and we like developed markets over emerging markets. So thinking about moving a little bit up in quality, not over risking within the equity space. So on those down days when the market pulls back, that's where we want to add exposure, the US large cap space and the mid cap space. And then if you're underweight in an international space, adding to developed over adding to emerging markets.
You know, we had one of our guests earlier from Ritz-Holtz Wealth, Callie Cox, who had said that a lot of executives may not need to actually come out swinging and say, hey, everything is now fine, when in fact, everything is not very much fine. Tariff trouble, as you note within your own outlook as well, that's still going to persist. And so with that persistence, what is the likelihood that in this next earnings season to begin in a couple weeks, that we actually have even more or any type of clarity from a C-suite across corporate America that is trying to best figure out, okay, how long could this linger and be a headwind to our own results?
Yeah, I think we're likely to see another earnings quarter where companies are reiterating caution or a lot of uncertainty still related to tariffs. I think with the rebound from the April lows with the market, we might have been lulled into a false sense of security around the tariffs, but the fact remains that a lot of things are still unsettled. We've got that mid-July deadline for re-implementation of some tariffs. Potentially we might see some trade deals between now and then. But the fact remains that that's still an uncertainty. And so we could, at the start of this Q2 earnings season, start to see some companies still a little bit uncertain, not quite knowing what to do with forward guidance.
And so as I'm looking through some of the top 5 things that you're looking for and top 5 portfolio ideas for the balance of 2025, one of the things that jumped out to me was how you're looking across some of not just the policy uncertainty, but then also trying to figure out where within this diversification strategy investors could potentially see some outperformance. And we had actually a viewer that commented to one of our conversations last week on Twitter saying, where have there been surprising elements of resilience even in the diversification strategy right now? Where have you been seeing that?
Yeah, I think what we've been seeing is a bit of strength in the international space. So far this year, developed markets, ex-US equities have really picked up the slack where other equity markets have, disappointed. We haven't fully recovered from that pullback in the US markets. And so had you had that developed market exposure as a part of a globally diversified allocation, would have helped a lot during that pullback that we saw earlier this year. We are continuing to expect some volatility that's going to be pretty much US centric. And so continuing to have that developed market exposure is a good idea for this year.
And what do you expect of the long tail of the generative AI trade to look like in all of that?
Yeah, we think with AI, it's been thought of as only a tech story, but we think that there are some other sectors that are really going to benefit from the AI space. So communication services in particular, industrials and energy, we think are all other sectors that are going to benefit really well. Those companies are going to be able to, utilize AI, or they're, a part of the supply chain for providing the energy necessary for generative AI. And so we think, don't just focus on the tech sector, which we are still favorable on, but broadening that out into some of these other sectors is going to be a really good way to play the AI trade.
Veronica, always great to grab some time and insights from you. Thank you.